All right, welcome back to the Know Your Numbers REI podcast. Your host, Chris McCormack. Honored to be with you today. We will be continuing the topic of our conversation, which is related to the tax traps that most Americans, and when I say Americans, I mean business owners and real estate investors, fall into. Now, if you're not a business owner and you're not a real estate investor, don't be ashamed. Don't shut the podcast off, because I believe there is still something for you to gain today, largely because this will not just apply to the business owner and the real estate investor, but also the wage earner, especially those who make a high wage, because today's topic is related to the confusion around tax preparation and tax compliance versus tax planning, tax advisory, tax strategy that leads to tax savings. This is the fifth area that people usually overpay, the fifth area that leads to higher taxes, the fifth mistake that people make as it relates to taxes. And we are going to be unpacking this issue, which I will title the DIY taxes, do-it-yourself taxes. We know that there is a big difference between filing your taxes and planning your taxes. One is building wealth and the other just reports it, and honestly, usually takes away from your wealth. When you are doing your own taxes, you might feel like you're saving money, but I have yet to see somebody who has done their own taxes and wasn't either making mistakes or missing out on opportunities, and those opportunities result in far greater amounts in your pocket, far greater amounts of peace, far greater amounts of confidence that translates to a greater return than the saving money that you might feel like you're doing by doing something with TurboTax or even H&R Block or some of these other services, I'll call them, that are effectively you doing your taxes on your own. So again, there's a big difference between planning and preparation. Planning builds wealth, the other really takes away from wealth, but it also just reports the wealth and the wealth that you've brought in at that year. So I will use an example of one of our clients who came to us a couple of years ago, and he was an executive. He had real estate investments. He had also some other investments in syndications and private businesses and stocks, crypto accounts of all sorts and sizes. And I was shocked when he came to us and said that he was doing his own taxes, again, like high six-figure salaries, executive of a company that pays him a lot of money to run the organization, and he's doing taxes himself. And he came to us and he's like, I just think there's got to be more. Like, I can't believe I'm paying $150, $160, almost $200,000 in taxes every year. Like, there's got to be a better way. And he wasn't wrong. We showed him strategies that not only made use of the real estate portfolio that he had, but also showed him industries that he could be deploying some of this capital that he was putting into these private investments, but it would yield a greater return in the form of tax savings. He saved about $50,000 in year one of working with us. So we know that most tax preparers, and even when you're preparing your taxes yourself, are just historians, right? They're taking the information that you provide them, or you're taking the information that you've gathered and telling the software what happened in the previous year. And this is great. It's needed. We need to be compliant and filing our taxes on time and filing them accurately and completely and correctly. But it's only part of the puzzle, and it's a very small piece of the ultimate goal, which is to pay less to the US government, keep more money in your accounts, do it the right way, do it ethically and correctly and in line with the tax code. And so when you're just reporting what's happened in the past, you're not planning ahead. And that's what tax strategists and tax planners do. Myself, I am a CPA. We prepare taxes here at Better Books, but more than that, we plan. And I have gone through some rigorous training and education with an organization known as the American Institute of Certified Tax Planners. And their goal is to find highly qualified CPAs, enrolled agents, tax professionals who have the skills and the abilities to understand the tax code and apply the tax code, but also want to provide more value to their clients and people who will become clients by planning around the calendar. And so whereas tax filing is just the compliance, tax planning is really the optimization. And I think tax planning is talked about quite a bit. And some people are like, what does that mean? Even people that we bring on as clients, they're like, so you do tax planning, that sounds great, but do you prepare taxes? Like, how does this all relate? And we have to take them through the process of what that looks like, and they are on board with it eventually. But like, the point is that when you hear tax planning, you're not really sure what that means. But I think a good way of looking at it is, whereas as tax preparation and the compliance is looking back as to what's happened in years past, tax planning and tax strategy is looking forward as to, okay, well, yes, taking what's happened in the past, but also what's going to happen in the future, and how can we better plan so by the time April 15th rolls around, we're not faced with an unforeseen bill and paying or getting into debt to the IRS, which is not what anyone wants. And so as it relates to tax planning, a lot of times you will be told that somebody is doing tax planning, but what you're getting is not necessarily tax planning. I believe tax planning is done with the insights and the expertise of a tax professional. So tax planning, when done by financial advisors, it's great. We work with financial advisors. We love financial advisors. But when it's just financial advisors, it can be troublesome because it doesn't take the whole picture, or things get missed, or maybe there are things that are better for you than just putting money into a brokerage account or a retirement account. So when I hear a financial advisor say that they do tax planning, I pause. I'm not necessarily sure it is tax planning. Like, they have accounts that are advantageous from a tax perspective, but if it's not done with the help of a CPA or a certified tax planner, then it's not always clear as to whose interests are being served and how can we make it so it is taking the whole piece. Like, because if I advise something that is outside of a certain account with a certain financial advisor, it might not result in the greatest ROI for the financial advisor, but it might result in the greatest ROI for the client. And so that is something that can be fizzled out with the help of somebody who is not getting paid by an assets under management fee. And so we have to be aware of what we are investing in when we're receiving tax planning from someone. And again, I love financial advisors. One of the best joys of my life is working with a financial advisor who is open to these advanced strategies or these creative strategies and making it all work together. Because I will also point people towards retirement accounts when it is right and aligns with their goals and what's needed in that season of their life. Another form of tax planning is projecting taxes. Like, planning to pay taxes is what I like to refer to it as. So it's when you say, okay, we made $500,000 this year. We can expect to pay $200,000 in taxes. There's your tax plan. That's a tax projection, and it's good and it's important, but that is also a plan to pay taxes. It's not a plan to save on taxes. So tax planning is taking all of this, the retirement accounts, the financial advisor, the relationship you have with them, as well as the tax projections, and saying, hey, you are set to pay $200,000, but if we invest here, or if we pay for this, or we buy this property, or we do this to that property, then we can save $100,000, and rather than $200,000, you're paying $100,000, right? So that is what tax planning is. When done correctly, it is not necessarily planning to pay the highest amount of taxes or thinking that the projection has to be the end result, but it's, okay, if we're seeing a $200,000 tax bill, how can we mitigate that taxes? What moves can we make here in September to not make that be the case? And then tax filing is the compliance part of that. It is taking the work that you've done throughout the year and reporting it properly to the IRS. Again, a necessary part of the puzzle. But if you are only doing compliance, if you are only filing taxes, especially if you're only doing it yourself, you're overpaying in taxes, and that is a problem. So if this is one of the 7 costly mistakes that people make, and it's the do-it-yourself taxes, again, people think that it results in savings because you're not paying $1,000 to a CPA or a CPA firm, or $2,000 to prepare your taxes, and so you're saving that money. But when you hire a CPA to do your taxes, you can rest assured that it's being done correctly. And if they have your best interest in mind and they know of certain areas that you can save, they're going to communicate those to you. And that doesn't always happen when you're doing it yourself. So it's oftentimes people have good intentions when they do taxes themselves. They want to save a buck, and we're all looking for ways to keep money in our account. But usually when you do your taxes yourself, you don't end up keeping money in your account because you end up overpaying to the IRS. So when you talk about some strategies, retirement accounts are a big piece of this. What is the optimal amount that you can contribute to a certain retirement account, and what kind of retirement account should you be contributing to so that your taxes both now and in the future are at the best place that they need to be at? What other investment opportunities are available to me as somebody who's either earning high amounts of income, like our friend at the start of this, or as a business owner? How can I use the tax code to better utilize my position as a business owner in a specific industry to pay less in taxes? These are all questions that you should be asking to the right people, which is the expert who's in your corner, working for you, working with you to strategize. And you might be asking these of yourself, but you don't have the answers at this time. And that's what happens when you're doing it yourself. The DIY strategy that a lot of people are currently using that results in higher taxes and these questions not being answered. Year-round tax planning beats last-minute scrambling, right? Because there are strategies that you can apply at the last minute, but I've worked with plenty of professionals who want to know ahead of time certain things that they can be doing so that when October, November, December come around, it's not like you have to do this. It's like, no, we've been talking about this. Now is the time to pull the trigger, right? Especially when you are thinking about deploying capital into specific investment opportunities or specific account types. Like, you don't want to hear from the person that you hired to do your taxes that on December 20th, you have to put $40,000 into this type of account and do it before this date. I'm going on vacation because it's Christmas time. Don't ask me any questions, right? So year-round tax planning is not only good because it helps you save on tax, but it's good because it keeps you in a mindset of like, okay, in April, we're talking about what we're going to be doing in December so that I can prepare, I can put money aside, right? My wife and I, running this business, have a plan that we're implementing. We know that there's something that we're investing in come November or December. And so now in the months leading up to that, we have the ability to put that money aside, prepare for that so that by the time that comes due or by the time the time is right, we're ready and the money is already set aside rather than having to rob from Peter to pay Paul, right? And so tax planning is not only beneficial because it saves on tax and helps better understand the strategies that can push the needle forward, but it also keeps that peace of mind because you're not being faced with that last minute scramble to save a buck here and a couple cents there. It's year round. And then I think when it comes to doing it yourself, some of the common mistakes we see, we talked about entity structuring. So when you're doing it yourself, you're not doing entity structure planning. That was last week's episode. If you missed it, go ahead and watch or listen to that. In the real estate space, we see a lot of depreciation errors, whether that's taking too much depreciation because you're not subtracting out land, right? Land is not depreciable and it needs to be subtracted out before you take the depreciation expense, or not getting the most amount of depreciation in the earlier years of your property, not depreciating things that are eligible for depreciation. So some pieces of equipment, some technology, like you might not realize that that's depreciable over 5 years or 15 years or 27 and a half years, whatever it is. Depreciation is a big piece that gets missed. And with our client that I mentioned on the start of this, he had rental properties and he was missing out on depreciation. And we've had other people that were doing it themselves and they were expensing things that weren't able to be expensed. So they were showing a net loss on their properties and they weren't expecting to pay any taxes, but really that had to be added back when it comes to the tax preparation. And so they would owe taxes on some of that. And so, okay, this is news that we have to plan for. What can we do to then offset that added income that we weren't expecting to pay taxes on, right? So these are some of the things that come as a result of doing it yourself. And these are things that when we as the professionals come in and peel back the layers and look under the hood, we're able to see you're doing this right, but this could be better. You're doing this wrong, but here's how we fix it. Have you thought about doing it this way? These are all questions that we want to ask of you as the taxpayer and the person who's coming to us for a tax plan. And then as a result of getting those questions, we can forge a path forward that will result in a greater ROI on your properties, on your business, on your investments. It will result in larger tax savings, which will result in keeping more money in your business accounts, your personal accounts, more money to spend on vacations, new properties, new businesses. These are all success stories that we've had with clients. They save $50,000 and then they're able to take that trip that they've been dreaming of, or they save $50,000 and that's the down payment on their next investment property, which then results in more tax savings as well. So if you want to build wealth, we really can't have you winging your taxes. We really can't have you doing it yourself. You have to design them in a way. You have to plan around them. You have to optimize them. And that requires you to be with a team who has your best interest in mind, but also has a knowledge about what is available to you and what's not available to you, and how you can expense that thing or this thing and invest in that way or this way, so that your money is working harder and you're not, right? Because nobody likes doing their taxes anyways. Nobody wants to take 10 hours collecting all the documents, putting it into the software, lacking the confidence of and the certainty knowing that it was done correctly and the most efficient way possible. Like, most people don't enjoy that. You'd rather have a root canal than have to struggle through doing your own taxes and having these questions weighing over your head. The answer to all of that is tax planning and tax strategizing with a qualified advisor. Not necessarily somebody who's gonna just run a projection and say, this is how much you're gonna owe. Not somebody who's necessarily saying that the best thing for you is to put money into this tax deferred account, then comes and results in assets under management to them. It's somebody that can consider all of these things and help you design a plan that results in the greatest ROI for you, for your family, for your business, for your employees, so that you can do what you do best. If you got any sort of value out of this, please do us a favor, give us a 5-star rating and review, hit that subscribe button and share it with a friend. This is stuff that we want other people to hear about, know about, so that they can have confidence in their tax plan and the strategies that they are implementing. Until next time, God bless you and keep moving forward.